Welcome to the Mentor Podcast, where the most highly motivated entrepreneurs come to get their weekly dose of financial stability with host Ron LeGrand, as well as other nationally recognized thought leaders who will teach you how to get, grow, and protect your wealth.
Well, hello, everybody. This is Ron LeGrand with another Mentor Podcast designed to help you make more money and keep more of it and retire rich and make sure that when you do retire that money's no longer a problem for you. And I've got a very special guest on our line today. And in fact, I got a subject that we're going to discuss that I never stop getting questions on everywhere I go, and that would be LLCs, you know, what, how, and what applies to me. And I can't think of a smarter guy on that subject than Mr. Lee Phillips, who happens to be an attorney out of Salt Lake. And we're going to pound him with questions today, and he's going to give us answers. And frankly, you're not going to hear what you're accustomed to hearing about LLCs out of Mr. Phillips. Lee, how are you, sir?
Good. How are you?
Okay. You know, I could sit here and talk about your background for a long time, but I think you're probably a whole lot more qualified to talk about your background than I am. So tell our listeners exactly what you do and how important you are.
Well, like you said, I'm a lawyer. Don't hold that against me. I'm actually a counselor in the United States Supreme Court. And I've spent the last 30 years helping people keep what they make and make more money and sleep better at night. That's about all you need, isn't it?
Yep, that's actually what the purpose of this podcast is, which is why you're here. And I might add that you are the lawyer who teaches lawyers on this stuff. So let me start with some questions for you. And I'm going to, we're going to stick on the LLC subject unless you want to change gears. But a lot of people make a lot of mistakes with LLCs. We all know you're going to need an LLC if you're going to do any kind of a business, basically. In real estate, I show people that they actually need several of them for various reasons. But then again, LLCs sometimes are misunderstood. So let's start with what are the big mistakes that you see people making who are using LLCs today that could get them in a world of hurt?
The mistakes people make are not treating it as a real live entity. It's got to be treated as a different person. If you just treat it as an extension of your bank account or of you, then we call it your alter ego, and it doesn't give you the asset protection that you want because they do what's called pierce the corporate veil. The argument is you get into court and you argue, look, Judge, this guy, he commingled the money with the LLC. He didn't do the formalities, hold the meetings. He just treated this as his alter ego. He didn't treat it like a real company. He put his piece of property into this LLC. He didn't get anything back in exchange for that. If you're going to give a piece of property to my company, you're going to want me to give something back to you to show that you own a chunk of my company. That didn't happen, okay, Your Honor. This whole thing's a scam. Set it aside.
So what you're telling me is it's probably not a good idea to pay my personal house payment and my electric bill at home out of an LLC.
Commingling money is the one. You do that, we got you. Okay. Let me explain why you use an LLC instead of a corporation for 2 seconds. An LLC has the exact same corporate shield protection that a corporation has. In addition to that, an LLC has what we call charging order protection, which protects the assets of the company from what happens to the owners of the company. So if you declare bankruptcy, and when I say asset protection, you automatically think lawsuit. Not necessarily. 56% of all bankruptcies in the United States are a result of somebody in the family getting sick. So the question is, are you going to lose your rental units if your husband or wife gets sick or your kid? And the answer for most people is yes, unless you have put it into an LLC. If you've put it into a corporation, they're going to take the stock of the corporation in your bankruptcy, and they have all of the assets of the corporation. If you put it in an LLC, by law, they can't take the assets of the LLC to satisfy your bankruptcy, your personal bankruptcy, because somebody got sick. So they have to go to court and they have to get an order which charges the debt in your bankruptcy against the LLC, but they can't come in, they can't take the assets, they can't sell the assets aren't theirs. That's a big difference from a corporation. So basically, I'm going to say you have twice as much asset protection as you do in a corporation. You have the exact same corporate shield, plus you have this aspect of it which protects the company's assets from what happens to you. How do you get in trouble personally? You get divorced. You hit a kid in the crosswalk. Somebody gets sick. Those things are things you can't control. But we're going to protect your rental units from those types of things as well.
All right. Now, but they can take the income from that LLC if it's being distributed, correct?
If it is being distributed, not if it's being paid out as a wage. But if the LLC declares a profit, then they get that profit under the charging order.
Well, there's a difference between declaring a profit, though, than making distributions. If the manager of the LLC does not make distributions, can they get the money that's in the LLC? No,
they can't. And the case that illustrates that is in Florida, where you are. Mm-hmm. It's the Olmstead case. Mr. Olmstead is a dirty dude. He embezzles tens of millions of dollars from Floridians. And actually, the FTC, the government, gets him. They throw him in jail. They get a judgment against him. And they say, okay, Mr. Olmstead, give us back the money. We're going to give it back to the people in Florida. And Mr. Olmstead, he knew this charging order stuff, and he stuck his tongue out at him, and he says, nah, you can't get this money. It's in an LLC. Unless I declare a profit and make a distribution out of it, you're not going to get any money. Go pound sand. Well, the problem is the Supreme Court justices in Florida, they're not interested in pounding sand. There's lots of sand in Florida. And so they said, okay, screw you, Mr. Olmstead. We're changing the law. The law read that the only remedy for a creditor of one of the owners of the LLC was to get the charging order. And they said, Mr. Olmstead, you have a single member LLC. You're the only person that owns this LLC. Screw you. We're going to take your money out of the LLC. Now, you've got to understand some of the history of an LLC. This charging order thing was originally developed in England not to protect Mr. Olmstead, but to protect his, I'm going to call them partners, the other owners of the LLC.
Right.
And Mr. Olmstead, you don't have any other owners. We don't need to use the charging order to protect anybody. We don't care about you. If you had other owners, then we'd have to honor the charging order. So in Florida, up and down the West Coast, Utah, Idaho, a number of states, you have to have multiple members, multiple owners, in order to get this charging order protection. And that's kind of the way the law is moving. But yeah, no declaration of profit, creditor doesn't get anything.
Okay, so let's dwell on this now, because I've been telling everybody the same thing. Owning an LLC with only one member is almost as deadly as not even having an LLC, because they can literally come in and take the bank account before you ever even know they did it, and literally treat it as if there is no LLC. So what you're saying, by the way, that you say that's state law now, not federal law?
That is state law, and okay. We've got about 12 states now that require the multiple member LLCs. If you're not in one of these states and you are the sole owner of the LLC, you still get the charging order protection. And I do have to make a distinction, and that is the corporate shield, which protects you from what happens in the company. The corporate shield has nothing to do with how many members. One member, we still get 100% of the corporate shield. But it's this charging order, this other aspect of the asset protection that that we're moving towards having multiple. So we have multiple members. It ain't going to hurt you.
Right. Well, all right, let's address that then. But first of all, before I go any further, I know our listeners are asking, well, where do I find out if my state is one of these states? Got a simple way?
Yeah, you look it up on the internet. which states require multiple members for charging order protection? And
Perfect.
like I say, you're going to get the Ninth Circuit, which is the folks on the West Coast. Utah, Idaho have actually passed laws which say no charging order protection for single members. And then Florida and Colorado have cases which require the multiple member charging orders.
Okay, well, I can tell you firsthand it's true in Florida. Because I went through a situation like that last year, but I'm not going to try to explain on here. All right, so let's say I live in one of these states, and now I'm fully informed that I should not own this thing by myself. Okay, if I'm married, that's pretty easy. We can guess who's going to come in this thing and own it with us, which is probably going to be the case anyway. What if I'm not married? What if I'm single?
Well, let me give you a timeout on the married.
All right.
In California, Texas, Oregon, they're what are called community property states. A husband and wife are considered one economic, one legal unit.
Oh, really?
So, yeah, I can't give part of it to my spouse. You can in Florida. I mean, your wife could own part of it and you could own part of it. But in these other community property states, and you know whether or not you live in a community property state, trust me.
Well, there's Google if you don't.
Yeah. But if you live in a community property state, you got to get somebody besides husband and wife because they're not counting as two people.
Okay.
Just a precaution there.
So the next obvious choice would be children, if you have children. And really, they only need a very small percentage, don't they?
Small percentage. We haven't litigated what percentage they need. There probably isn't ever going to be that issue. The issue is, the question is, do you treat them like a real partner? Do they get their 2% of the profit? Do they attend the meetings? Are they a real deal, or is this just a scam? Your Honor, this guy's pulling a scam on me. I don't have to protect it. I don't have to recognize his LLC.
So the point is, whenever you distribute money to you, you should distribute to them proportionately to make sure that that doesn't happen and have a track record of that. But on the other hand, if they own 0.5% of the thing, I mean, how big a deal is that? Keeping in mind, of course, they'd have to pay taxes on that 0.5%, but their children probably don't have any tax liability anyway. If they did, you could always loan them the money to pay it or something similar. Okay. Now, the whole plan here is really very simple. They cannot take the asset that it belongs to many for the sins of one. Is that about the size of it?
That's well put.
Okay. Now, what if I'm single? I don't even have a wife, and I don't have any children. What do I do?
Well, if you're really rich, I'm up for adoption.
Okay. And if I'm not?
You've got to have your mom or your dad or your brother or somebody.
Okay. Okay. You just got to get a friend or a relative or somebody to get in there besides you. And now, again, I live in Florida, and I can tell you right now, if I'm married and I live in Florida, it would be tenants by the entirety, which is another discussion altogether. And there's only about 20 some odd states that even honor that. But the whole game here is very simple. Don't own an LLC by yourself with one single owner. But then I heard you say that that's even okay in several states. As soon as I find out
okay in the majority of states. In 38-ish states, that's just fine. Now, it may change in the future because the history is charging orders were not intended to protect one owner. They were created to protect the other owners from the mistakes of the one owner.
Now, so what happens if a creditor comes after me and gets a charging order against my LLC, but I don't ever distribute any money out of it? Who gets to pay the taxes?
There's not a lot that the creditor can do. It is possible that the creditor could be in a position where he would have a phantom income from your LLC. You would make a profit statement but never actually distribute any money. That is possible. It isn't as possible as most people think it is. because in order to actually stand in the economic shoes of the individual and not just have what we call an economic lien against the LLC, to actually take the position of the person that you've got the judgment against, you have to do what is called perfect your charging order. And most people never perfect it. If it's not perfected, then I pay off the debt and the creditor goes away. They don't get any more lien against my LLC. If they have perfected their charging order, then they always are there and they stand in the economic shoes, is the way we say it, of the original partner or the original owner. So it's somewhat of a myth that that they get stuck with the taxes and no income. That is possible. But the real point is, I'm not going to declare a profit, Ron. Yeah, I owe you $100,000. You've got a lien against my LLC. I'm never going to declare a profit. By law, you can't come in. You can't manage my LLC. You can't make the distributions on your behalf. You have no management say over this company at all. You just get a profit if I declare it. And I'm not going to declare it. I tell you what.
Don't I have to file a tax return on the LLC?
No, you don't have to unless there's a distribution, unless you've perfected your charging order. So it's not, you can't put me with a phantom income unless I've perfected that charging order. But Ron, I'm never going to give you $100,000. I'm never going to declare a profit. I'll tell you what, I'll give you $10,000. You drop this whole deal.
Right.
That's
Settlement.
A good position to be in if I'm arguing with my creditor.
Right. Okay. Truthfully now, realistically, it's unlikely that a creditor is going to get a charging order against the LLC because they're going to know darn well they're not going to get any money before they even get to that point. Is that correct or incorrect?
That's basically correct. You can go through the whole shebang as a creditor and end up with a charging order, and it isn't worth a lot to you. So why do we go to court, Ron? The most you can do is get a charging order against me. Why don't we just settle this thing for a dime on the dollar now?
Right. Okay.
And I won't have to pay the damn attorneys, and you won't have to pay the damn attorneys. I mean, those great guys.
Well, Lee, I often tell people that it's not about trying to hide stuff from predators because they're going to find it one way or another. It's about making sure they can't get it after they find it.
That's exactly what I do. That's exactly right. I had a guy call my office several years ago, and we proposed that we do this and this and this and this for his asset protection. And he kept saying, "No, I'm anonymous. Nobody ever knows. I'm anonymous. I've done all this stuff. I'm anonymous." And I finally threw up my hands. And I said, give me the address of just one of your properties. All I need is the address of one of your properties. And I'll admit that it cost me $60, and I have access to databases that general public doesn't have access to as a lawyer. But I came back with about a 5-page printout in a couple of hours. I had every property he'd ever owned, every mortgage he'd ever had, every bank account he'd ever had, every business he'd ever had an interest in, every partner he'd ever had. I had everything. I faxed this off to him, and the guy picked up the phone, called me, and said, "Okay, anonymity doesn't work. Now what do we do?"
That's true. In fact, guys, if you don't believe this, why don't you go run a background search on yourself? And you still won't get everything Lee can get, but you will be shocked when you get all the information that people can get with you by paying $20 or so. I mean, you think you have privacy in this country today. Think again. And, of course, one of the games that lawyers love to play, Lee, is to get you in a deposition and get you to lie. And now it turns criminal, called perjury. And wouldn't you agree that as a lawyer, you pretty much know the answers to the questions you're going to ask before you call people into a deposition?
Yeah, you never ask a question you don't know what the answer is.
Yeah, so you just waiting for them to tell you a whopper.
Yeah, you just wait for them. That's true.
That's how come a lot of our politicians are in jail right now, huh?
I want to take this in a little different direction for 2 seconds. We've got a few more minutes here, Ron. Can we talk about the taxes of an LLC? Because you're a little business.
That's my next question.
Oh, gee. Sorry, but I took your thunder. Right. Sorry, go ahead.
Oh, no, that was my next question, but make sure you put C's in there as well.
C's? What kind of C's?
C corporations.
C corporations?
Yeah.
The neat thing about an LLC is you can have it taxed any way you want. The LLC was created in Wyoming in 1977. The rabbits weren't running that winter. It was a deep snow, and there was nothing to do in Wyoming. So the legislators got together, and they created this animal, which is actually a cross between a partnership and a corporation. The corporation has the corporate shield. The partnership is where we get the charging order protection. But the big issue was, how are we going to tax it? So they write the IRS and they say, okay, we've created this animal called an LLC, a limited liability company, not a limited liability corporation. We've created a limited liability company. How are you going to tax it? And when we said that for corporations, we want a corporate tax for a little corporation, they created subchapter S. And we frankly expected them to create subchapter T, or whatever it is. And the IRS, it took them 20 years. The IRS finally came back and said, we don't care how you tax it, you get to choose. So you can have your LLC taxed as if it were a sole proprietorship, one guy. You don't even get a tax ID number for your LLC. You file a Schedule C or a Schedule E or whatever it is. The IRS calls that a disregarded entity. You can have it taxed as a partnership if you have more than one guy. And frankly, if you have a single member LLC and you're doing real estate investing, you're going to have it taxed as a sole proprietorship. Now, that doesn't mean you don't still get the asset protection. You get all of the asset protection, but your taxation is as if you were a sole proprietorship. You file a Schedule E. If you are making money by selling widgets or services, you are going to have your LLC taxed under subchapter S of the IRS code in all likelihood, because there are some tax advantages there, and we don't have time to go into that. But you could also have it taxed under Chapter C of the IRS code, just like a C corporation. And Trump has moved the C taxation structure, the corporate tax structure, they say. No, it's the Chapter C tax structure, to a flat 21%. You pay 21%, end of discussion. And that is hardcore law now. That's in there forever. Most of Trump's tax laws are going to sunset. They're going to go away in 2025. We didn't have enough votes in Congress to actually solidify it, so it was permanent. They've got some sort of a rule in Congress that if you don't get so many votes, then it can only go for so many years. But at any rate, you could have it taxed under any one of these chapters or these sections of the IRS code, which is a big advantage. If you've got two guys or more doing real estate together, you're going to have it taxed as a partnership. Why? Because your real estate income is mostly passive income. Your rents are unearned income or passive income. Now, are you familiar with 199A, Ron?
I don't know. Certainly not familiar with the number.
Well, I'm going to swear here because this is part of the new Trump tax law. Basically, and if you earn under $315,000 a year, that's your adjusted gross income. No, that's you.
Okay.
If you earn it less than that, you're home free, no questions asked. If you earn more than that, then we've got some issues. We can still get around it. It becomes complicated. But 199A, and nobody's ever talked about this. 199A says that if you have a pass-through entity, that is a sole proprietorship, or an LLC taxed as a sole proprietorship, that is a partnership, or a LLC taxed as a partnership, that is an S corporation, or it is a LLC taxed under Chapter S of the IRS code. If you have a pass-through entity and you make under $315,000 a year, it's pretty much no question you're home free. You add up all of your expenses, your depreciation, everything in your LLC. Whatever's left, your profit, right?
Mm-hmm.
You deduct 20% of it. You get 20% of your profit tax-free, end of discussion.
Right.
Did you know that?
Yes.
Okay, you just didn't know it was 199A.
Correct. But as a couple, I think it's $435, isn't it?
You're correct. It's actually it's $315 for a couple, and it's whatever half of that is for a single.
Seems like it was
it's 157. It phases out between 315 and 450 or whatever it is. There's a phase out period there.
Yeah, okay, that's where I'm getting that 4 from. Now,
that's where you're getting the 4 from.
But you just said that's if my personal income is at 315. I was on the impression if the LLC's income.
No, it's your personal income. It's your adjusted gross income, because the deduction comes off of your 1040. When we say it comes off below the line.
Correct, as it would with any flow-through entity.
It's relatively complicated, but no, it's your income on your 1040. It includes your wife's income. It includes lots of crap.
Okay.
They did not simplify the tax law at all, but this is a really neat gift. Nancy Pelosi would call it a crumb that people haven't heard about. You're going to get 20% of your profit tax-free, basically. And if you
don't make $315.
Well, if you make $1 million, Ron, you can still take your 20% up to half of the salaries that you pay, and you pay all of the people in your organization, don't you? And yourself. You can take.
You better say that
20,
again, because.
Okay, you're making $1 million a year.
All right, got it.
And you pay $500,000 a year in salary, but you've got $1 million profit. That includes your W-2 wage. It includes all your employees' W-2 wage. It includes everything out of this LLC.
Out of this LLC. But what if there are multiple LLCs that I own? So I get to combine them?
The answer to that question is we don't know. But I think you're going to combine them.
Okay.
The law has a lot of holes in it. I'm going to give that to you. But if you make $1 million and pay $500,000 out in salary, you can still take 20% of it, because that's less than $500,000 that you pay out in salary. You can take $200,000 off your taxes.
No kidding. All right. Well, I did not know that.
There are 3 ways you can qualify it. If you buy equipment, that's another way you can qualify. It is extremely complicated, but it is really a great gift.
So is this tax code that was on a postcard?
Yeah, this is tax code on a postcard. Yes, sir.
Yeah, okay. Well, gosh, that's good to know, which makes a very strong case. Only an idiot would try to do their own tax returns.
You probably, I haven't really talked to you in a number of years because I haven't been out on the road and stuff. But in the last about 4 or 5 years ago, I picked up in my office a guy who is an 8-year special auditor, special agent for the IRS. And in the last, about a year ago, I picked up the director of the Western region of the IRS in my office. And I've got another young lady who's been there about 10 years and is an auditor for the IRS. These all work in my office now.
Well, okay.
Because the IRS, taxes are your major impediment to financial success.
Mm-hmm. Yep, that's true. Which is also why we're experiencing the growth we're getting right now.
Yeah, well, we won't go into that.
Yeah, all right. Well, listen, I'm about out of time here, and I understand that you got a really, really, really good, cool offer for us. So why don't you tell us what that is?
Well, I'd like to make sure that your LLC is done properly, and the guts of your LLC is what we call the operating agreement. The articles of organization that you file with the state, they're no big deal. But your operating agreement, that's what you keep in-house. That's your bylaws, your rule book, is a big deal. And I have 2 hours of audio instructions where I sit you down and I go through an operating agreement. I've got operating agreement forms, all on CD, and then we talk about which state this clause is in and which state that clause is in. You can go through, you can design your operating agreement. If you go to Legal Doom, they're going to give you about a 5-page operating agreement. That's not enough. You need 25 to 40 pages minimum to address the issues that are going to come up in your company. And if you don't address them in the operating agreement, you can do anything you want in your operating agreement as long as it's not illegal. If you don't address them, then you get whatever your state has. And would you be surprised that your state doesn't have your best interests in mind when it writes its rule book?
That would be a shocker. Yeah.
Yeah, you get to write your own rule book. So okay. I'm going to make the 2 hours of audio and everything on a computer CD, or it's all electronically delivered, available to each one of your folks. You can get it on the internet. It's $50, $49 something. Ron, can I give it to your people for $19.97?
Wow. Yeah, you can if you want. That's a pretty nice gift. I can tell you that.
That's a 60% deduction, and if you've already got an operating agreement, get it. Listen to the audio instructions, the lecturing. Oh, I don't lecture. It's kind of fun. But listen to it and get to know your operating agreement, because when I get you into court, I'm going to read your operating agreement. And if you haven't followed those rules, I got you.
Yep.
You don't get your asset protection.
So we are talking about $19.97, right, Lee?
$19.97. And you get it by going to the Mentor, what is it, Ron?
The Mentor Podcast /Lee. The Mentor Podcast /Lee. Better not pass up that one, guys. I know this guy. He knows stuff attorneys won't even know. So
yeah, that's a good offer.
Go listen to these things and look at your operating agreement, and you probably find that they're not in there. So that's when you need to take this information to your attorney and ask him why.
You can amend your operating agreement. It's easy. We teach you how to do that.
Okay. All right. Well, we appreciate that offer. Thank you for taking care of my folks. And,
no.
Okay.
We go back 30 years. I'll take care of your folks anytime.
I have no idea when we first met. I cannot remember. So it probably was 30 years.
It's in the 90s or 80s anyway. Probably in the 80s.
Early 80s. Yeah, early 80s. All right, sir. Well, I thank you for taking the time to join us today. Valuable information. I wish we had more time to spend on it. In fact, we probably ought to do this again on another subject, because when it comes to asset protection and estate planning, we could talk for a long, long, long time. And unfortunately, most people don't take the time to learn this stuff before it's too late. And that's what we're trying to avoid here. So appreciate your time today, sir.
No, thank you, Ron.
All right. For all of you listening, if you don't know me, I'm Ron LeGrand, and you can get all kinds of free stuff on my website, ronlegrand.com, including my book that I just read on audio versions. You actually listen to my real estate book now, and it's free, and you'll see a bunch of other free stuff on there as well. So, again, thanks for listening. I'll see you on the next podcast, and thank you, Mr. Phillips. Appreciate your input.
That's all for this edition of the Mentor Podcast. To connect with Ron and learn how you can attain financial freedom, as well as up-to-date strategies to grow and protect your wealth based on today's discussion, go to www.connectwiththementor.com.